Welcome, Randy. Can it be trusted?
Good afternoon. Well, I really love this rally, but at the same time, I don't really trust it. But you have to be a little flexible because at the end of the day, every new bull market starts with a bear market rally. So you've got to be a little bit flexible here, but you also have to be very careful. We're bumping along the bottom, and it's just hard to imagine that the market's going to make a lot of extra progress when the Fed still has a lot of work to do in terms of raising rates even further than they have so far.
If you don't trust these rallies right now, what would make you change your mind and say, okay, this is the sustainable rally that we want, that the bottom is in?
Yeah, one of the keys here is holding this 3,600 level on the S&P. If we keep on making new lows, that's obviously going to be bad news for the rally. It's just not going to happen, and we're going to have to wait even longer. But if we can hold somewhere, and I'm not a precise person who says 3,600 is the number, but you need to basically hold this area that we're in the S&P 500 and say this is the low. We're bumping along the bottom, and as you were saying earlier, the earnings look pretty good. They're coming in already. And so there's a possibility that the stock market and the bond market may start to look past the recession that we're in, and may start to look past what the Fed is planning to do in November and December.
Randy, if you don't trust the rally, then how do you use what you do trust to inform your strategy?
Yeah, it's really tough right now because you can look at all the fundamentals of the companies, and so much has been wrecked this year. If you want to look at, revenue growth and earnings growth and all the different, metrics that we typically look at, instead, you really have to pick carefully. You have to pick strong companies that are going to, for sure, be there when the new rally begins. Stocks like Lockheed that you were just talking about, and Salesforce, Lockheed being one of our top 10, and things like Tesla, NVIDIA, Airbnb. These are great companies, and they're for sure going to be there when the next rally begins. So if you're holding the high quality stocks, even if they're, you want some value, you want some growth, but you need to hold those high quality companies that have good management and that you can count on to be there when the rally really begins and the bear market is over and a real new bull market takes over.
So you say great companies that are still great, but stocks are beaten down, like Costco, Home Depot, Chipotle, among others. Are there others?
Oh, yeah. There's an endless list of stocks that are beaten down. I mean, you can go with
True.
Apple for sure. I mean, we were buying Apple, as much as a month or two ago, and we're still buying more Apple, adding to positions. Now if one of our clients already has a bunch of Apple, we're not adding to it. But if anybody was a little bit light on Apple, it's like, hey, let's add a little bit more Apple. It's cheap right now. Yeah. That's where people need to really think in terms of being a shopper. Stocks are on sale. They're 20, 25%, 35% off, depending on what stock you're looking at. And if you went to the store and the stuff you wanted to buy was 30% off, you'd be pretty happy.
Yeah.
So I know that only makes people happy who are buyers now and not holders for but when you get a good entry point like this, you really want to ride this into the next 3 years.
Randy, you have given us a perfect segue to our next segment where we're going to talk a little bit more about Apple. Thanks for being with us today, Randy Warren.
My pleasure. Thank you.
And in fact, Apple and Tesla have been losing trade so far this year, with both stocks down double digits. That is not stopping individual investors from piling in.